Today's panel is called Battery Boom or Battery Bust: What VCs are actually funding now. As energy storage moves from hype to industrial reality, venture capital is getting more selective and strategic. So this panel is going to explore where VCs are still placing bets in batteries, how a lot of the recent policies, tariffs are shaping investment theses, and what it takes to build a venture-backable battery company today. With that, I'm joined by our two panelists, Shay Natrajan, who's a partner at Mobility Impact Partners, a private equity firm that invests across AI, mobility, energy, fintech, and software. Shay leads the collaboration with MIP's large corporate coalition and is responsible for generating high conviction investment theses. And I'm also joined by Andy Lubershane, a partner and head of research at Energy Impact Partners. He works with a large global consortium of strategic limited partners to invest in the tech needed for a safe, affordable, reliable energy transition. So thank you both for joining us, Shay and Andy. I wanted to kick us off with a question. If we had run this panel a year ago, what would you say differently about battery and energy storage investing today? And I'll let anyone start first.
I am more optimistic now than I would have been a year ago. Hi, Andy. Hi, Crystal. Hello, everyone. Nice to be here. I think in the last year, there's a couple of things that have happened. I think the boom in AI data centers and the constraints on the grid from AI data centers has intensified. So that problem has become worse, which is great for energy storage, energy management, kind of batteries for grid support, etc. And even kind of um, batteries for smaller scale commercial, residential. So I think the energy storage portion of battery demand is actually increasing at a much larger rate than it was a year ago. And then secondly, I don't know if you guys are paying attention to this, but the tariffs on Chinese batteries and battery materials increased from 41% last year. And as of January 1st, 2026, it's now 59%. And so that is giving the domestic battery industry more breathing room. And so for those two reasons, I think that I'm more positive now than I would have been last year. Um, yeah. Curious to hear your thoughts, Andy.
Yeah, well, hey, Crystal. Thanks again for the invite, Shay. Good to meet you. Yeah, I would say I don't feel a lot differently this year than I did last year about investing in battery technology from a venture standpoint, which I hate to say, but I have to say is on the negative end of the spectrum in general. Sorry, I think. Never mind. I thought someone was talking. Yeah, I think that it is a very difficult space for venture investors to play in, pretty much at any level of the supply chain. I mean, if you look at the history of venture investment in battery technology, it's pretty much a graveyard of companies that have been received in some cases hundreds of millions of dollars in investment and have for the most part been crushed over time by the onslaught of the global sort of incumbent lithium-ion battery supply chain. And we can talk more about why that is and where there might be bright spots. But I think that unfortunately the headline still has to be that this is a really, really difficult place for venture investors to play. And I don't think that any of the fundamentals have changed there. And if there's one maybe defining event of the past year, it's like the full collapse of Northvolt in Europe as being sort of like the one example of how friggin' hard it is to build at least a vertically integrated, like a full stack, large scale battery manufacturing operation, even without using dramatically new technology. So I'll pause there. I hate to be on the negative end of the spectrum, but it's worth, I think, talking about the elephant in the room.
Yeah, Andy, you've talked in your Substack. You've often separated works on paper from works in the real world. Has that gap widened over the past year?
I don't know that it's widened. I would say what continues to widen is, or what continues to become more difficult is catching up with the incumbent supply chain and incumbent OEMs. Like, I think that's a mistake that battery technology investors have made since time immemorial, at least in the 15 plus years that I've been following the industry, is sort of like you always hear people talking about, oh, well, we're going to beat lithium ion on cost. We're going to be 2 times cheaper than lithium ion is. And you'll notice that investors or entrepreneurs that tend to make those claims, are often betting against lithium ion from 3 years ago, as opposed to what they should be doing, which is betting against lithium ion 5 to 10 years from now, and where the incumbent industry is going. And the incumbent industry, particularly the China-based industry and Chinese OEMs, BYD, CATL, have have only continued to become better, stronger, faster, cheaper over that time frame. So, um, I've heard trying to compete with the lithium ion industry is sort of like compared to catching a falling knife. I think that continues to be the case.
Yeah, we'll dive deeper into China and its grasp on the supply chain shortly. But I wanted to do a quick kind of 20-second policy gut check. Um, do you think if have IRA changes, the foreign entity of concern or fiat constraints and tariffs meaningfully changed what's investable, or has it mostly changed who funds what? Shay, I'd love to get your take, and then Andy.
Yeah, I think it's definitely, I have lots of thoughts on what Andy said, by the way. Just
Yeah.
small sidebar. I think when you think about battery technologies as the manufacturing side of it, there's sort of the fundamental kind of material side of it. And then there's the packaging integration side of it. And then there's the as a service side of it. So I do think that I agree with with Andy on some of the manufacturing pieces, but I think that there's opportunities in the other areas that I talked about that are worth discussing. But I will save that tangent for later. Um, Policy. So sorry, Crystal, could you repeat your question? Policy gut check. Um,
Yeah, like have the changes to the IRA, fiat
yeah,
constraints, tariffs really changed the landscape of what's investable right now?
yeah, I do think so. Look, I think the ERA. I'm not really sure what to call it. It wasn't like officially repealed in any capacity, but for all intents and purposes, all of the funding is canceled, right? And so that's obviously impacted. So number one, the biggest impact is EV demand. That has gone down. And when you look at what was driving battery demand, when we first did this analysis in 2020, depending on kind of how you looked at it, like 90 to 95% of the demand was driven by EVs. A large portion of that was, expected inflection point in EV sales in North America. That hasn't come to pass. North America, the US kind of stalled at somewhere right before an inflection point. Um, and it's kind of there. There's been a little bit of a kind of pullback, but yeah, I mean it's not really growing the way we thought it would. And I think yes, that's actually I would say decrease the size of the mobility battery market. I would say pretty significantly. So I think that's the number one kind of big piece of it. Number two is kind of the support for domestic battery manufacturing that has also been curtailed, which meant that a lot of startups, small businesses that didn't really have a technology mode, didn't have a distribution mode, um, were in trouble or died early. So it became very, very hard for battery startups to scale. So I think that the impact of policy over the last 2 years in the battery space has been significant and it's been downward pressure. It hasn't been significant in the positive sense, it's been significant in the negative sense. But I also think that the increasing tariffs on China batteries and battery materials are sort of the one positive piece I see for the US battery industry. Um, like I said before, the IRA increased tariffs for China batteries from 7.5 to 25%. And it was there until last year when it became 41%. And as of 14 days ago, it's now 59%. So that's great news for anyone who's trying to manufacture battery cells and packs in the US. I think the thing to watch out for is, are Chinese cells or even packs going to continue to be more competitive even with the increase in tariff? And I want to say that is my hypothesis is yes. I think it's going to decrease the price difference, the effective price difference. But I think prices for packs are falling so fast now. I think it was like $70 per kilowatt hour on average right now. Um, and falling fast, that even with a 60% tariff, it's basically about as competitive as a pack manufactured in the US. So I think that is, um, or even slightly cheaper. And so I think that's something to focus on. There's other implications as well. Um, yeah, but we can get into that when we have specific questions. But I think, well, the implication there is I think AI data centers became a lot more important because AI data centers are not price sensitive. So again, we'll talk about that in a bit. But I think the implication of policy has been, in summary, overall negative, because of the reduction in EV demand and the loss of sort of EV support and also domestic battery manufacturing support. But it's been slightly positive due to tariffs. It's not clear whether that advantage will sustain because of how fast battery prices are falling. And so I think it is forcing battery startups to look at markets that are not price sensitive. And I think that's the direction that the battery kind of ecosystem has to move in.
Yeah, Andy, do you want to? Yeah, go ahead.
Yeah, it's a complicated picture, obviously. I think that when you think about the prospects for a U.S. battery manufacturing supply chain, um, I think there's basically one path to success, and it's always going to be a partial success because, again, I don't want to be too negative here, but I think that, and I've seen some folks in the comments making these points, like you kind of can't emphasize enough how far ahead China is on battery manufacturing than the US at this point. And it's not just cell manufacturing, although China does make by far the best cells in the world at the cheapest price. But it's also every other step in the supply chain upstream. They have a chokehold on everything from like raw graphite for anode materials to precursors and both cathode and anode materials, electrolyte as well. Um, and so there's only two other sort of countries that have anything close to what China has, which is Japan and Korea. Um, and the only path forward for the U.S. and the only way we've seen U.S. manufacturers be successful is to work with the incumbents like LG, that already have capacity outside of China and that are maybe 3 to 4 years behind BYD and CATL as opposed to 10 years like any U.S. manufacturer starting from scratch is. And I just don't think that the current tariff regime or the FIAC requirements like fundamentally change that dynamic. I think they make it maybe possible to build up some amount of independent supply chain in North America. Um, and we are seeing some amount of success there. Like plants are getting built, especially at the cell manufacturing level. Not so much yet in those upstream components, which are actually going to be critical over time if you want FIAC compliance, because if you need 80% of the cost of goods in the battery to be made outside of China, then then inherently you can't buy cathode from China, because that's already like 50% of the cost of the cell. Um, and so I'm cautiously optimistic we'll develop some amount of supply chain here because of those policies. But again, like I see the value accruing to incumbent, large incumbent global manufacturers more than to any kind of startup company, which is again why it's not a great place for venture investors here in North America. Um, the one thing I would add is like I'd also fundamentally believe that the value of batteries right now and probably for many years to come, like the greatest value is accruing to consumers of batteries, right? Like fierce supply chain competition, relatively low prices, low margins. This is all a good thing for anyone that's using batteries to do stuff. And so I actually think that's where the best bets are to be made, out there in the economy. I'm actually relatively bullish on electric vehicles, even in America. I think this is a great time probably to invest in the EV supply chain if you can make targeted investments there because it's sort of down and out in investment circles. But like I fundamentally believe in the advantages of the electric drivetrain, and then all kinds of other stuff using batteries. Grid storage, which Shay brought up, is a great example, which is booming right now, in part because batteries are so cheap. So this is a great time to be thinking about what you can do with batteries, and probably still not a great time to be thinking about how do I insert myself into the incumbent supply chain. At least not for the faint of heart.
Yeah, so let's talk a little bit more about China. Of course, China's grip on the supply chain is stronger than ever. And Andy, as you mentioned, yes, they have really strong presence in raw graphite or upstream materials. So be blunt, does the West have a credible path to build defensible battery businesses, or should we stop trying? Shay, I kind of want to
Yeah,
ask you
this
first.
is a really difficult question. Look, it's gonna be extremely difficult. I mean, China's like 20 years ahead of us, right? And so there's three possibilities. Either the tariffs and the barriers to entry for not just Chinese cells or packs, but also Chinese material suppliers increase to such an extent that moving the whole supply chain to the US becomes the only solution. I think that's unlikely to happen, to be honest, but that's certainly one scenario. I think the second scenario is to have some type of technology partnership or um, I would say kind of manufacturing partnership with Chinese companies, which by the way, like for example, Cattle and Tesla have a partnership for their Nevada factory that makes cells for, or it's going to make cells for their mega packs, right? So that's one example. And there's other examples in the automotive industry as well. So that's kind of two, which is kind of collaborate with Cattle, or BYD, for example, to shift some of that manufacturing onshore. Um, the third is actually the Korean supply chain. I think so. The third scenario, I would say more broadly, it is non-US but also non-China parts of the supply chain. Think LG and Samsung in Korea. Think, um, for example, Andy brought up cathodes, lithium carbonate refining in places that are not China. So actually, China produces fairly low lithium raw material. It just has the largest refining facilities and the most refining capacity. And so that's one quick way to move kind of cathode precursor material outside of China. And it's going to require a little bit of time to develop that part of the supply chain, but it's not impossible and it's less complicated than like battery cell manufacturing. Um, I think that third piece is the most likely scenario. I think what's likely going to happen is that you're going to have a lot more ex-China, ex-US parts of the supply chain become more developed. Um, for example, Korean battery manufacturers, ex-China, ex-US parts of the supply chain, I think are going to become more important. Um, and I actually think that's a path of least resistance compared to the other two. I also think in parallel, you are going to have partnerships between the large US OEMs and folks like Cattle or BYD, but I think those partnerships are going to be very closely monitored and are going to face kind of regulatory hurdles to come to pass. And so that's not going to be easy, but I think it can be done over time for very large companies. So I don't know if that answered your question, but I would place my bets on the ex-China part of the battery value chain, um, end to end, developing, becoming bigger, becoming a larger part of the supply base to the US. Um, and after that, on technology partnerships that do come to pass that I think are going to be spearheaded by OEMs, and less on kind of a purely US domestic battery value chain. I think that just became a lot harder. And the only way it succeeds is if the regulatory protections are even higher than they are now. And maybe that'll happen. I don't know. That to me, that's not the most likely scenario.
Yeah, I don't have a lot to add. I think it's, as Shay mentioned, as I said before, I think partnerships with incumbents in Korea, in particular, LG, Samsung, are the way to go to have any semblance of a chance for U.S. manufacturing. And I suspect because I think some amount of protectionism to help grow and create a viable U.S. industry to a certain extent is probably a bipartisan goal at this point. I think it's fair to bet that there's going to be some amount of protectionist policy around that battery supply chain in the U.S. for some time to come, particularly as batteries take more of a role in critical defense applications as well, like drones. Um, I don't think the U.S. is going to want to be entirely reliant on China or any other country for that supply chain. But I do think, sadly, it probably means like any country like the U.S. that says we're not, we want to be as independent as possible from China for the foreseeable future is not going to get the best batteries and is not going to get the cheapest batteries, um, because those are going to come from China for as far as I can see for a while. At least when we're talking about sort of the conventional lithium ion family and branches off that family.
Yeah, I want to kind of talk about, the lithium ion family versus some alternatives. Andy, you talked about grid storage booming because batteries are getting so cheap. But you've written about how even if the tech works, grid infrastructure is slow to build, it's hard to connect to. Does that make you more bullish on batteries for grid storage applications, or does that push you towards alternatives?
I mean, one real advantage of batteries um, for providing capacity in the power grid is that they are so modular, which means that they're much more flexible to deploy than large power plants of other kinds. Typically, if you want to build a cost-effective natural gas power generation system, you're going to be doing it at somewhat larger scale. Batteries can be deployed anywhere from a household all the way to a grid substation, an industrial facility, a data center, to large utility scale deployments, which we're seeing today, which is a real advantage in storage's case or batteries case. And I'm actually very bullish on distributed batteries. I think there's a lot of room to go when it comes to distributed battery storage for the grid. It's an area we're spending a lot more time at Energy Impact Partners right now. Um, Actually, we have a company called Grid Beyond in our portfolio that has been deploying larger scale battery systems at industrial sites as part of a sort of demand flexibility program that they run, which are starting to become really cost effective at this point. And the boom in grid storage we're seeing right now is mostly large scale systems, almost all lithium iron phosphate, mostly what we call like 4 hour batteries. So they can basically fully discharge over a period of about 4 hours. Over time, that needs to increase as you sort of tap out the opportunity for clipping off those very short peaks in energy demand. You need to go from 4 hours to 6 hours, 8 hours, and beyond. And that's where you start to see maybe some alternatives to lithium ion having a more of a kind of fundamental cost entitlement advantage over that longer duration time span.
Yeah. So Shay, you're kind of bullish on some of the investable surface area around the lithium ion ecosystem.
Yeah.
Andy, you've talked a little bit more about you're tempted by beyond battery pathways. Wanted to pressure test this a little bit. Um, yeah, Shay, I guess if you're a founder today, is the smarter move to build around the lithium ion ecosystem rather than betting on a paradigm shift? Would love to get your take.
Yeah, I think so. Look, I think that the demand growth is going to be driven by two things. It's going to be driven by AI data centers and battery services that emerge as a result, which means kind of commercial, small industrial, and residential kind of battery storage systems that emerge as a result of grid reliability risks that emerge as a result of AI data centers, right? Plus grid firming and grid stability for AI data centers, plus AI data center backup storage, right? So like AI data center and adjacent are the opportunity areas that I would focus on if I was a founder. So what does this mean? I think I agree with Andy. We are really seeing like LFP as the main technology there. So I would not, at the moment, Mobility Impact Partners is not betting on like a paradigm shift in battery chemistry. LFP exists, it's cheap, easy to procure. Yeah, there's the China versus non-China piece, but capacity is not really an issue. In fact, there's going to be overcapacity, which is going to result in decreasing prices. There's more competition because the ex-China part of the value chain just became more competitive. So we really think LFP is here to stay, at least for sort of the grid and sort of energy storage space. I think the areas that where we're seeing a lot of traction are the following. I think offering energy as a service to counter grid reliability risks is becoming really important. It is a very competitive space, actually. And it's hard to stand out, but it's a massive market. And if you have a very clear distribution path, there are companies that can make it successfully. It's such a massive market that even if you have like 1 or 2% market share, it's huge. That's like, I don't know. I want to say it's like at least $500 million in revenue. Um, and we're actually seeing the demand increase ex-US because data centers are coming up everywhere, and the US actually has one of the most reliable power grids that exist. And so when you think about places like India, where you have low grid reliability to start with, and you're going to have data centers come up, you know, commercial and residential kind of battery storage systems just become all the more important. Places like Middle East and Africa. Um, so that I think like out increasing your purview from kind of I want to say like fundamental battery chemistry technologies or novel battery chemistry technologies to energy storage systems for commercial and residential in the US, but also outside the US, I think is a major area of focus. I think the second area of focus I would say is anything to do with battery services. Think battery condition monitoring, reverse logistics, energy management, anything that's more software and service related, that's not going anywhere. And that's actually, um, it's easy to create moats in those spaces. Yes, it is competitive, but if you attach, I mean, when you have a service package, which includes, for example, a battery pack plus monitoring services plus energy management services, that becomes it becomes a very sticky product to sell to a customer. So I think the services part of batteries is going to become a lot more important. The third piece I would say is battery manufacturing scale up. So what do I mean by that? It's not battery manufacturing. I think if you're a small startup that's trying to make LFP batteries in the US, good luck. That's not what I'm talking about. What I'm talking about is technologies that are going to help companies like Tesla, for example, scale up LFP production in the US. Things like line monitoring, manufacturing diagnostics, digital twins, battery quality testing, um, like inline battery quality testing or non-invasive battery quality testing. I think those things have just become a lot more important. Now, I'm not sure that those are necessarily venture backable, but they're certainly very strategically important to large OEMs that are trying to manufacture internally. So I would say if you're a startup in that space, you should really be talking to corporates as much as possible and trying to get in front of corporate venture capital firms because this is like an important thing that, automotive and energy storage OEMs are really focused on and are thinking about a lot. So those are the areas that I would focus on. I agree with Andy that look, like doing battery manufacturing from scratch in the US just got a lot harder. It was always hard, but it just got harder. Um, and I think fundamental battery chemistry, to me at least, I'm not. I LFP for energy storage is here to stay. There's like silicon anode, solid state. That stuff's like almost at commercialization or early stages of commercialization or early stages of scaling. So that's not going anywhere. So I see the runway for battery chemistry for like 5 to 10 years very clearly. Um, and that's the VC horizon, right? We're looking 10 years in the future. So at this moment, we won't take bets. I think this is a good question to ask 3 years in the future because then we have to figure out the next 3 years of our horizon. But yeah, we're not really taking bets on novel chemistries. We're not really taking bets on domestic battery manufacturing. But I think all of the other stuff that I said is very much we are taking bets on anything that helps AI data centers. We are taking bets on um, kind of commercial, residential, small industrial, energy storage services, battery as a service companies globally that have a clear path to market. And I know that CVCs are taking bets on like strategic manufacturing scale up enablers for battery manufacturing. So that's where I would focus on.
Got it. Andy, really quickly before we transition into Q&A from the audience, do you want to respond to that? Because where are you placing your biggest bets right now?
Yeah, so as I mentioned, I'm extremely bullish on the use of batteries out in almost any corner of the economy, and so um, I'm very interested in particularly lower cost means of getting batteries out there at a distributed scale. That's kind of where one area we're focused on at the moment for grid storage, but deployed at the edge of the grid on customer sites, again, ranging from residential all the way to industrial scale. We have made a few bets on alternative battery chemistries or storage technologies, I would say. And the principle that myself and some of my colleagues at EIP have always tried to stick to is that we don't want to invest in anything that lithium ion has any kind of a chance at catching up to, in
Just
any
returning
kind of
this.
foreseeable future. We want to invest in things that have a fundamentally different cost entitlement or performance capability than lithium ion. So nothing in that 50% better than lithium ion kind of category will do because, no matter where you're standing, probably lithium ion can bridge that gap over time. So, Crystal, you're with Form Energy, so we're an investor in Form. One of the few investments we've made in alternative storage technology because Form's iron air chemistry has just this fundamentally lower cost entitlement, not just 2x lower, but 10 plus times lower than where lithium ion even is today for ultra long duration or multi-day grid storage, which isn't needed everywhere, is not something that is going to be part of every utility integrated resource plan in the near future, but we think has a role, particularly in parts of the world where you have very low grid reliability or especially high penetration and very low cost and abundant renewable resources, potentially to enable off-grid industrial scale energy consumption, like off-grid AI data centers, for example, is where a technology like Forms, I think, could be valuable over time. And the other thing I would say about Form is that part of an investment thesis in a company that's trying to commercialize a new battery chemistry, for all the reasons we've already talked about, just how technically difficult it is, how much capital you need to raise in order to get to the level of scale that makes sense. Any bet on battery chemistry is also a bet on the team, and it's not just like a you don't want a team that has just like really talented scientists like that. You're never going to be successful betting on someone. And apologies to folks on the line if this is you, but who's a really talented battery scientist out of university, right? Like this is a commercial execution play that requires like lots of operational experience in order to make work. And so that's the kind of founding team that you'd need to see. Um, Another example is alternatives to batteries altogether, or electrochemical batteries altogether. So we invested in a company called Rondo Energy, which is really the leader in thermal energy storage technology. Basically, if you're not familiar with the concept, it's storing energy as heat, as high temperature heat. And the virtue of that is there is a variety of materials out there. Rondo uses basically bricks that can store an immense amount of energy in a pretty dense form factor at very high temperatures, for extended periods of time, very, very, very cheaply. And so you can think about the Rondo system as basically a giant box filled with bricks. Into the box goes electricity in the form of electric resistance heating elements that are pretty much like what you would find in your toaster, that are sort of woven through this brick material. Heats up the bricks, and then the box spits out continuous heat from as few as 4 hours a day of solar input. Now, the best use case for this is not to then convert that heat back into power via like a steam turbine. The best use case for it is then to use it to decarbonize an industrial facility. Most of the energy in most industrial facilities is not electricity, it's heat. It's high temperature heat, process heat to transform some material. That's very typical across the world. In fact, 25% of all energy consumed in the world is just high temperature heat in industrial facilities. So we think that's a great way of, again, doing something that lithium ion can't do. It's taking energy and storing it very cheaply, but also converting it into high temperature heat at the same time. And so, yeah, you're not in danger of being crushed by the lithium ion juggernaut when you're in a sort of completely different space.
Yeah, and do I have a few minutes? Sorry, Crystal. I have a thought on what Andy just said.
Okay, we have
Um,
30 seconds, then I'm going to turn it over to Q&A.
okay, I think Andy highlighted two very important things. One, the role of which VCs startups partner with just became really important. I do think that the players that are really, really serious, that have a about the energy space, that have a very like a much more long-term view, more patient capital, I think are the ones that are still going to be playing. And I think that's who startups should focus on if they're doing core kind of materials research. And then the second thing is this path from prototype to commercialization just became a lot more important because Andy's talking about some really, really fantastic innovations. In our experience, the kind of pre-commercialization stage of these things is always precarious because there's like very, very long pilot kind of timelines and processes. And so I would say startups that can go through the piloting process quicker with the potential end customer and make a sale, I think those are the ones to keep an eye on because kind of fundamental material startups, that's where the risk is. The risk is not the technology. The risk is can they get to a sale fast enough without, being in an eternal pilot, which happens, we've seen happens a lot. Anyway, over to you.
Yeah, we're a little short on time here, but this is a really insightful discussion, and There are plenty of questions that I wish I could have asked. Before we thank our speakers and move into the Q&A portion, I just want to pause for a moment to highlight what's coming next. Immediately following this panel, we're going to be moving into our parallel breakout sessions. So we have 6 deep dive discussions led by experts across the battery ecosystem, covering startup strategy, battery ecosystems, and other technical topics. So we encourage everyone to stay on the Zoom to join one of the breakout rooms right after. These sessions are intended to be interactive, so don't leave after this keynote concludes. But with that, I really wanted to thank both Shay and Andy for a really great discussion today.